Hi everyone, let's cover my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we have a 5-wave impulsive structure to the upside, followed by a 3-wave correction, and then we want to see continuation to the upside. The impulse starts with a multi-1-2, and what we want to see here is a quick high volume wave 3 to the upside. Preferably price also takes out this high here at 95.1k, as that invalidates the bearish scenario that I have coming up. Now this then leads to a typical impulsive structure, a couple of 1-2s, bit of a grind to start an impulse, get a quick move to the upside in a wave 3, and then end with a few 4-5s, which once again create a bit of a ranging structure, very similar to what we had over here. Grinding move to the upside, couple of 1-2s, get your quick wave 3 to the upside, and then you end with your 4-5s. In this bearish scenario, we're looking for a bigger 3-wave corrective structure, after which we want to see price move towards the upside. Currently working on a triangle, and specifically wave C of the triangle, so wave A and wave B already finished, being a simple zigzag structure. Wave C, however, is a double zigzag, counted as a wave W, X, and then a wave Y. And just to show you here, to be more specific, this is what the WXY looks like to finish wave C. ABC in W, wave X, ABC in a wave Y. Common target for your wave Y is 89.8k to 91.9k. Minimum target for wave C of wave Y is taking out the high of A, which happened, but of course wave C should be a 5-wave impulsive structure. At the moment, we can see a 3-wave move to the upside. So what we like to see is a wave 1, a wave 2, wave 3, wave 4, and a wave 5. If price, however, moves towards the downside, there's always still the potential of counting this as a flat and move up afterwards. And that is also the reason why I still have the invalidation at this low here at 81.1k, and I did not yet move the invalidation to this low. However, if price moves towards the upside a little bit more and touches the 1.618 at 90.2k, a flat structure, ABC, becomes incredibly unlikely, and that is when I move the invalidation from this low to this low over here. Nonetheless, we're looking for price to move towards the upside a little bit more. It is no problem for price to finish just above the 1.236 here, above 91.9k, as between 92.4 and 93.4k, we have some very interesting resistance, including a weekly naked point of control at 92.5k. The invalidation for the triangle is taking out the 95.1k high, as well as taking out the low at 76.5k prematurely, because you first want to finish a wave D. You don't like to see price do this, right? We need to get a D, get E, and then move towards the downside. However, if price moves towards the downside and does not create a move to the upside for wave E, but instead continues to the downside for the 76.5k low, we have to be very aware of a diagonal 1, 2, 3, 4, 5. Look for a 3-wave retracement and another move to the downside to take out this low. The invalidation for this diagonal is touching this line over here, currently sitting at about 91.7, 91.5k, which is created by taking a channel from the low of 1 to the low of 3 to the high of wave 2, because in a contracting diagonal, you don't want wave 4 to hit the upper trend line of the channel, as then it is not contracting anymore. So that is why that is the invalidation for this particular scenario. We also have some news this week on Wednesday, Thursday, and Friday, all at 1:30 p.m. Central European Time. So make sure you trade safe, as it can increase the volatility on the chart. And if we then look at the probabilities of the different scenarios, then more locally on a 1-hour time frame, we were looking last week for price to take out this high, which now happened just before recording, so that is nice. But in both the bullish as well as the bearish scenario, we preferably move up at least a little bit more. Of course, in the bullish scenario, you want to see strong continuation, price to take out this high amount of volume coming in. But even in the bearish scenario, the double zigzag WXY, we want to see a wave C, which is a 1, 2, 3, 4, a 5-wave structure. So if this is the low of B, we still want to see a bit more upside to come, and then observe the reaction of price at the different resistance areas. Theoretically, however, if we really go into probabilities, the bullish probabilities only really take over when we get an impulse to the upside, preferably taking out this high to invalidate the bearish triangle as well as the diagonal, and then see a 3-wave corrective move down. As long as we don't see a strong push to the upside in a wave 3 followed by 4 5s, preferably invalidating the triangle, arguably your bearish probabilities are higher than the bullish probabilities, but we take it level by level, see what we get. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.